Hey everyone, welcome to the California Real Estate Investor Podcast. I have Jayla co-hosting with me today. She is going to barrage me with questions regarding creative financing and seller financing because a lot of buyers, a lot of investors right now are sitting on the sidelines complaining about high interest rates. And we're going to talk about a strategy I used at this property I'm in right now in Santa Barbara, California, to have the seller finance the property. Let's dive in. Hi, it's Alan here from the California Real Estate Investor Podcast. I want to share with you two cool free resources. First of all, our Facebook group, California Real Estate Investor. I'll put a link in the show notes. You can connect with us there, share stories, share about what you're doing, where you are in California, and we look forward to that. And then secondly, the website, the CaliforniaRealEstateInvestor.com. I've just uploaded a free mini course about flipping luxury homes. You can download there. If you're flipping homes and you want to make more profit per deal by going higher end with your flips, that's a great resource for you. So check that out. I look forward to connecting with you on the other side. First of all, Jayla, thank you so much for joining me. Jayla is a fellow California real estate investor, and she also has a management company that manages vacation rentals. How you doing today, Jayla?
Good, thank you. Glad to be here. Exciting topic, so thanks for having me.
And you have full permission to just hit me with questions as they come up. We'll talk about this property. I've also done some other transactions, which we'll talk about in another episode, in creative financing, specifically seller financing. I bought a 48 unit in Texas that was completely seller financed, did not use a bank, negotiated the down payment, negotiated the interest rate, no appraisal, no loan application, etc. So that's a fascinating deal as well. We'll talk about that in another episode and some other property purchases that we've done with creative financing. And let me also add this disclaimer. With creative financing, there is a bunch of ways to do creative financing. There is everything from rent to own and lease options to sub to, buying a property subject to. But what we're going to talk about specifically today is seller financing. And that is where the seller becomes the bank, and essentially we make payments, our bank payments, our mortgage payments to that seller. That's what we did on this property.
Okay, Alan, that sounds amazing. Follow-up question there. How do you find and why were you looking for these seller financing options? And how do you find them? I think that's kind of the first question, right?
Okay, that's two questions, and they're both great questions. So how and why? Let's start with the why, because that's the motivation, right? So my motivation to find a seller finance deal was a few things. For everyone, it's different. For me, at the time that we were looking, I was involved heavily in construction on a 74 unit. We were redesigning a 74 unit apartment building in Tulsa, Oklahoma. And I had a lot of money moving. It was a construction loan. I knew that I probably wouldn't qualify at the time for a purchase on a home, at least in the price range we were looking in. And I'll just give you those numbers. We were looking, around $1 million. I just knew it wasn't going to happen. And I actually was kind of not even looking, but my wife stumbled upon this property and it had an acre of land and really got our attention. We just came to look at it, because it never hurts to look. Again, before I go too far into that, our why was I didn't think I could get a loan. And that could be any reason for someone listening, any reason you think you couldn't get a loan. There may be a way around that, and there usually is a way around that with creative financing. On all of the creative financing transactions that I've ever done, I've never submitted a loan application. I've never even had my credit checked. There are some things that are very important to the seller. Down payment is one of them, but I never had my credit checked. I never submitted a loan application. So that was the why. Any further questions on that?
No, I think I love it. Where there's a will, there's a way.
Yeah. So I was super motivated once I found the property, and then I was like, wow, this property really makes sense, because for a lot of reasons. One is just it had a guest house and just other things to it that were like, wow, we could really do a house hacking situation here where we rent out the guest house and do other things that really made sense for us. So I was super motivated. Then as I'm looking, here's where we get into the how. The seller, I was told, was 80 years old and he owned it for over 30 years. So do you think he still had a mortgage on the property?
Probably
No.
not.
Probably not. I mean, unless he could have at some point pulled out money, but it's
Yeah.
hard to pull out money when you're 80, right? Like
Hmm.
a bank,
Yeah.
a bank's not going to, usually you're not like working full time and making a bunch of money when you're 80 at a job. So it's hard to get money out of a property as you get older. So he didn't have a mortgage. I said to the agent, hey, would you think he'd be open to seller financing? Now, I'm going to tell you right now, most real estate agents, they either don't understand creative financing or they get nervous or whatever. So even if they say no, don't listen to it because they're just guessing the seller's not interested. But he actually said, go ahead, submit an offer and I'll see. That opened the door. But even if he would have said no, I would still submit a seller finance offer because they need to put it in front of the seller. And I would help them understand why it could be a win for the seller. So that's the most important part of the how, is trying to find a way you can make your offer that is seller financed a win for the seller. To do
And,
that, yeah, go
sorry,
ahead.
back up 1 second. How did you find out that he had no mortgage?
Yes.
Because
Okay.
that's not really like, I
Yes.
think that would be helpful to know. Yeah.
Yeah. Well, there's a few things you can do. You can just ask the agent, do you know if he has debt on the property? The other thing you could do, if you're talking direct with the seller, you can ask them if they have debt on the property. You can pull title. So if you have that ability, or if you have an agent that has that ability, and by the way, if you need an investor agent, I'm going to put a link to this podcast where we can connect you with an investor friendly agent that will know these things. But you can ask the seller direct, you can ask the agent, or your agent or you can pull a title profile sheet and see when the last time a mortgage was put on the property, because that's public record. Those sorts of things you can usually figure it out on if there's a mortgage. But even if there is a mortgage, there's ways to still do creative financing, which could be subject to, which we're not going to get into. We don't have the time to get into today. Or you could give them enough of a down payment that it pays off that mortgage. And then it's super clean. And then they're just financing the rest. Did I answer that
Got it.
question?
Yeah, that's
Okay,
great. Yeah. So yeah,
good.
so then how did you approach it after that with the
Yeah,
realtor?
right. So, how do you make it a win, right? At that point, you find out what could be a win for them. Usually, as a seller's older, and most of my seller finance transactions, they have been older and they've had a lot of equity, which makes it really easy to seller finance. Then, what's attractive to them is being able to make not just their purchase price. And I tell them this, I say, you're not only going to make your purchase price that we agree upon, but you're going to get interest on top of it. You're going to become the bank. So you're going to get your money plus interest. And on top of that, you're going to have some tax deferral. When you sell, you're not going to have to pay all these taxes on any gain right away. I'm going to be making payments to you. And if my payments are interest only, then you won't owe any tax on the gain. Of course, I'll say you check this all with your CPA. I'm not a CPA, and we can add this disclosure to the podcast. I'm not a CPA, so check everything with your CPA, your attorney, your dentist, your chiropractor, whoever you need to check it with. But from my experience, I've been able to communicate to them that what I've seen in the past is that if I'm paying you interest as a mortgage payment, it's considered interest income to you, right? It just makes sense. I'm not
Mhm.
paying any of your equity gain that you've made on this, so you will not owe taxes on that equity gain until you collect it. And that sometimes even encourages them to finance me for longer. The one I did in Texas was a 10-year loan. So they financed me, the seller did, for 10 years. And then I sold the property at the end of that. So that entire 10 years, I was able to gain equity, gain income, all of that on that property, and then sell it. On this one here in Santa Barbara, we negotiated seller financing for 1 year plus a 1 year option to renew. And at the option to renew, because he didn't want to go long term, I think he wanted to get some of the money to his family, but he gave me a year because the property needed a lot of work, a lot of construction done to it. We said, look, we'll do the work, we're going to restore it, and then in a year, we'll bring in a new bank, the appraisal, and then we'll pay you off with that new loan that comes in. And that sounded good to him, but I'm glad I had the option because it took us longer than we thought, and I was able to exercise the option. And the option gave him an additional, I think it was $100 or $200 a month on the payment. And so it was a little bit of a win for him to give us another year. And it was a win for us because we needed some more time to finish the construction.
Back up for one more minute and go
Yeah.
through, because I think sometimes if you, let's say you have a realtor who doesn't understand seller financing, right? And you're not really talking directly to the seller. So how are you laying out all those terms to get it across in a way that is appealing, to
Yes.
hook them, to get them interested?
Great question. And that happens a lot. If I can't talk to the seller direct and they're being guarded by this, realtor usually, then I will put it in writing. So not just the offer in writing, I'll actually add a cover letter and I'll explain in detail in that cover letter some of the things that I just said, where it's a win for the seller to finance. It's a win for them because they're going to make their purchase price plus interest. They're going to become the bank, giving them a down payment. We're going to record this on the property. They're completely secure. Explain all of these things in a letter. And that is really smart because sometimes the agents will not do a good job of pitching it to the seller. They'll just say, hey, here's a seller financing offer. I don't know if I really recommend it. Sounds risky, right? Or whatever they're going to say. So if I document it well in a letter, then the seller will read that and it'll really help in that communication process.
Awesome. Yeah, that's great. And what would you say are, like, if there were, five levers that you can kind of pull, what would you like say are the 5 points that you want to address for the seller to make it attractive? Like,
Yeah.
interest, or what would you
Yes. Yeah, that's
suggest?
good. So the 5 points I would make to make seller financing interesting and creative to the seller are: number one, I would explain to them they're going to get their purchase price that we agree to plus interest, right? So they're going to get the money they're hoping to get, plus they're going to get even more. On top of that, they're going to have a tax deferral. So any tax on their gain, what they're selling, they're going to get to defer and push it down the road to however we agree to go for the loan. And then number three, a win for them is that I might be the only offer, right? So in a situation, let's say I'm offering the same price as a cash offer, they're probably going to go with the cash offer, right? This is a market where a lot of buyers are sitting on the sidelines and they're scared of high interest rates. So it creates an opportunity for me to go in with this strategy and make an offer on a property that has zero offers and the seller's sitting there, especially if it's overpriced. Sometimes I love overpriced properties because on an overpriced property, I have zero competition. They will come down. We had one that came down $200,000 in price. They dropped from 1.5 to 1.3 because they had no other offers. Sometimes an overpriced property has zero offers. I'm their only offer. That's a win for them. The other win could be that they are needing income in their retirement years. So they like the idea of having income. And so all of a sudden, this becomes an income stream of payments coming to them once a month. I can tell them, look, we'll set it up on ACH, automatic. It just goes into your account. No checks, just an electronic payment into your bank account. That sounds good to everybody. It becomes just a stream of income for them. And I can literally spell that out in the letter. This will become a stream of income for you as interest on your purchase price that we're buying for. So yeah, I think all of those things, if you document it well in a letter, it can pay off huge dividends.
Very cool. And a couple questions on those. So on the interest rate, how are you determining kind of what that, is it market interest rate? Is it lower? Is it
Yeah.
higher? Like, how are you kind of getting into what that is?
Yeah. That's what I love about creative financing and seller financing is everything's negotiable. When I deal with a bank, almost nothing is negotiable. Like they just tell me this is how it is. This is how it's going to work. And they just push me around and they're usually late at funding the deal and there's nothing I can do. And they're just like, too bad. We're the bank. We kind of do what we want. And with a seller, it's amazing because everything's negotiable. Down payment's negotiable. Interest rate's negotiable. The term of the loan is negotiable. I can figure out what works. One thing that I've been taught from my coach many, many years ago was to not negotiate interest rate, negotiate payment amount. An example I can give is on the apartment building we were negotiating on for seller financing. We said, look, we can pay you $7,800 a month, automatically just deposit it in your account. That worked great for him. For us, it worked great because it was like a 4 something percent interest rate, and it was way lower than what the bank would have done. Now, if I said to him, hey, we can pay you 4.5%, that doesn't sound as exciting as the dollar amount, 7,500. We negotiate based in dollars. Also, it just avoids any sort of calculations. This guy was old, he was a straight shooter. He just like to tell him how many dollars are going to go into his account every month is what he wants to hear, not interest rates. And then we got to pull out our mortgage calculator and all that nonsense. I just shot him straight and he liked it. And then same thing with the down payment. I did not use percentages. I did not say, hey, we'll give you 25% down or we'll give you 30% down. I said, we're going to give you, however much, 210,000 or whatever it was on that property. We're going to give you this as a down payment. And we talked about it a little bit in advance that was enough to cover a mortgage he had in place to pay off that mortgage. And then the rest would be gravy. But what was a huge win for him is that guy was making $7,500 a month. And that is, what is that on my calculator? That's pretty good salary a year. Times 12 is 90,000 a year. He was making 90,000 a year doing nothing. Like literally, he didn't even have to cash the check. He went from managing this property himself, running all the maintenance, all the property taxes, the insurance, managing managers and tenants and all that. He went from all of that to now moving into just collecting 90,000 a year doing nothing. And so it was good for him. It was good for us, but we got to negotiate all of that, the interest rate, the down payment, all of it. It was beautiful.
Yeah, that's amazing. And so it sounds great if I was a seller, but how do I trust that you're going to pay me every month? So what's that setup
Yeah,
look like?
good question. Few things come into play. One is that they like to see a good down payment. They really do. It makes them feel secure. And if you don't have a good down payment, that gets into some of the creative financing techniques of private money, right? So you may have someone who can help you with the down payment. You may have an investor, you may have a family member, you may have a friend who could go in with you on the down payment, especially if you can negotiate a deal out. You could say, hey, I've got this deal where the seller's going to finance. Could you go in with me in a down payment? Or maybe you could pull an equity line or a credit line from somewhere to help with that down payment. But they do like to see a down payment. That makes them feel secure. There are rare situations where a seller will finance with very little down. It just depends how motivated the seller is, right? Generally, they like that. They like the down payment. I think they also like to see what your experience is. If you have experience in real estate, so you can talk about that. You could submit a resume, whatever. I think they like to know that you're experienced. Anything that builds credibility and trust, because ultimately that's what they're relying on. So whatever they know about you, maybe you've worked a steady job for a certain amount of time at a company they know that's local, or maybe whatever would build credibility to them that they'd know about you, that builds trust. Those are some of the things that go into it that really, really help. Again, it's rare. Every once in a while there'll be a loan application that especially an agent might say, well, I want you to fill out this loan application. But usually a lot of it's just built on trust and on the numbers making sense and them feeling comfortable.
And I guess another question is kind of what's the team look like to actually close on the process? Like you have your
Yeah.
realtor, is it just an attorney, or what's
Yeah.
that process look like?
Okay, so two questions. So one is there a service, and then who's the closing team? So the service, yes, you can use loan servicers. I haven't, but you can. So there's loan servicing companies. You can just Google loan servicing companies, obviously check them out, make sure they're legit. But there's loan servicing companies out there that will service the loan, especially if you're making payments that include principal pay down. They'll track all of that and they make sure payments are coming in. They make sure everything's getting covered and all of that. Generally, for me, I've just wrote check or sent the electronic ACH payment directly to the seller every month, and then they were recorded on title as a lender, and it was as simple as that. For the closing team, you can have an attorney involved if in drawing up the note. It depends on, in California it's a little different than other states. Some states are attorney closings, other states like California are escrow closings. Here you may have an escrow officer who is pretty familiar with this process, and they will easily know how to get it recorded. With the actual note that you record, you may need help from the escrow. You may need an attorney or to buy a template online that you can use and craft with your attorney. But that's not rocket science. It's really not that difficult to do, but you may need a little help there, especially if it's your first one. That's really it, just having a good team, pretty simple. One thing I want to go back to though, let's dig a little bit deeper into finding these opportunities, because I think that is one of the biggest hurdles for people. I would say, like, if someone comes to me and they say, how do you find these? I've looked and I haven't seen them. And I would ask them, how many properties have you looked at where you've really investigated the seller? If you've looked at 3 properties or 5 properties in the past 2 months, on 2 of them you found out about the seller, your numbers aren't good. Like, that's just, you got to be swinging more, right? So you want to be looking at properties. Just, it doesn't cost you anything to go look at properties. Go look at properties and then ask the agent, tell me about the seller. How old are they? Why are they moving? What's the motivation? And then you can eventually get to the point where you might be like, would they be open to seller financing? Or you may talk to the seller direct. Same thing. But you want to get out there and looking, because it is a numbers game. It's getting enough properties that you're looking at to the point where all of a sudden you found one where it's like, oh wow, this one might fit. And I don't know what those numbers are for you. They're going to be different for everyone. But I would say for me, it feels like 1 out of 10. It's not too bad. 1 out of every 10 I ask and I dig into it and I find out about the seller, I'm like, this could work. Like, the seller's older, like, it just kind of fits all the scenario that we mapped out. So that's another thing I'd add. You can also pull records. If you are more sophisticated and you're pulling records, you're sending out mailers, or you're trying to call owners, you're doing any of that, you can pull title records on who has owned their property for more than 10, 15, 20 years. Those are going to be prime candidates for seller financing. Those are a few things you can do to look for them.
That's great. I've used in the past PropStream. Do you recommend that just for kind of finding background information? Is that pretty accurate? I don't know how accurate it is or actual.
Yeah, I'll try to include a link down below. We've got a promo with them that we're running that's a good one. I've got a few others. Any of them I'll try to put as links on the podcast. But there's a few services that are great for pulling data and getting out mailers, or if you want to skip trace and call, whatever your strategy is, if you're trying to reach sellers direct, those will work.
That's great. So then, okay, you find it. I'm kind of curious. So how long are you I don't know if we fully clarify, like, how long are you making those payments? Is there a balloon payment at the end? Like, what happens kind of, what's that second, later part of it look like?
Yeah. And what could go wrong at the end?
Yeah,
right?
That's true too.
What if you get to the end and you're not ready to refi? So let's talk about that. Let's talk about what it looks like on your payments, and how long are your payments on a seller finance deal, and then what happens if you get to the end of it and there is a balloon payment due. So a few things. One is what happens. So let's say you've negotiated a seller finance deal, but you're also in that, maybe you're negotiating the term as well. So how long is that going to be? I would say, it's going to be anywhere from 1 to 30 years. It could be 1 year. Like, if the seller's like, okay, I'll do this, but I really don't want to do this very long, you could explain, well, okay, we just need it for a year. We're going to reposition the property, have a new appraisal and a new lender come in and refinance you out, right? And so you're just making the payments for a year. It could be 30 years. You could have a fully amortized 30-year loan, and then I'd probably have a servicing company in the middle who's running that amortization and whatever, but it could be a 30-year. But the tricky part is what could go wrong if it is a year or 2 years and you get to the end, you didn't negotiate an option to renew, a balloon payment's due. Then you're stuck, right? So then I would recommend first to go back and try to renegotiate with the seller a loan modification. So basically say, hey, look, here's the situation. Document for them the progress you've made. Hey, look, here it is. We made every payment on time. We've also done these renovations. Send them pictures. Give them as much data as possible. Say, we've done all of this to the property and we want to just extend it another year or 2. And on top of that, we're going to pay you this much more a month, right? You got to make it a win. It's got to they look at it and it's like, oh, wow, this makes sense. Okay, they're doing a good job. Okay, we can extend it another year, right? And I've done that and it worked. Let's say you have a seller that's just nasty. and or they've passed away and their family's taken over, right? Because that happens too. And their family just wants the money. Like they've already planning on going on cruises and everything else they're planning. They want their money now. And they say, no, you did all that. And they say, no, we're not going to renew. You need to pay us. The mortgage is coming due. So then you're in kind of panic mode. But what you need to do is really just figure out your process forward. So you're going to have to either, at that point, the obvious would be potentially sell the property because you don't want them taking it back. You don't. Now, foreclosure takes a while. In California, it can take a long time. So you don't have to worry that they're going to, immediately show up and take the property from you. Your time is limited. So you want to get a strategy together, figure out what it's worth. Could you sell it? The other options would be, could you pull in some other money, some private money that would come in? Could you pull in even hard money as a lender? What kind of money could you pull in to replace them and get them paid off, and then just bring in another investor or another lender to get you to finally get to that long-term financing? Those options could totally work.
That's great. Yeah, because I think that a lot of people do that. Well, what could go wrong? What could happen?
Totally.
Is creates a little bit of fear there. So
Yeah.
knowing there's options, right? And I guess same as where there's a will, there's a way in the beginning. You can just figure it out at the end, right?
Yes.
Very cool.
Absolutely.
Do you ever go over asking price to try to get it? Like, let's say,
Yeah.
it hasn't been sitting because that could be a benefit to them, right? I don't know. Have you
Right.
done that? Or is that an
Yeah.
option?
So you typically will negotiate on either price or terms.
Hmm.
So either one can make a deal work for me. So on the 48 unit I bought in Texas, I didn't negotiate on price at all. He told me his price, and at the time that one was 1.8 million. Again, it was over a decade ago. I've sold that property now. I just said, and then I started talking about terms and I knew his price was it was kind of market value. It was a little aggressive even. I also knew that if I could get my hands on this property, I could make it worth a lot more than that. I just said, okay. And then we hammered out the terms, which really are what made it work for me. Because I got the payment to a point where I'm like, I can afford this payment. There's enough income coming in on the property where we can totally afford to carry it. Then I'm going to improve it, and then that's just going to go up. That monthly income is just going to go up. I didn't negotiate in price. Even if the price went up a little bit, I wouldn't have cared because I was planning on grabbing that thing, renovating it, holding on to it for a long period of time, and then eventually, possibly selling it or never selling it, right? So price can be like non-negotiable. I mean, in terms of like, I'm not even going to try to bargain with them if they'll give me my terms that I want. But again, it depends on the opportunity. The opposite of that would be if I'm coming in with cash, or basically my investors and I are coming in to buy the property with cash with no lender, then it's all about price, right? Because I'm like, I got my
Hmm.
terms sorted out. We're coming in with cash. So we want the best price we can possibly get. So that's the two avenues that I would focus on.
And are there any properties that you think lend themselves, like type of properties that lend themselves more to seller financing, like commercial or residential or apartments, or is it just totally depend on the seller?
Totally depend on the seller. It could be anything. Well, to be fair, the property that is probably seller financed the most is land, because land is harder for banks to lend on. Or banks, I should just say banks make it harder to get a loan on land because they're scared of it. So sellers on land are often very, very, very open to seller financing, which is interesting because that means you might be able to pick up a piece of land, build a home on it, and sell it. And the seller will finance the land. You would not have to even use a bank. Maybe you just use the bank for the construction part of the property. But yeah, so more often land is open to it. But then in terms of homes, commercial, apartment buildings, there's seller financing happening in all of those categories.
That's amazing. I didn't know that about land. Very cool.
Yeah.
Wheels are spinning.
Right? Me too.
Yeah. That's great. So, big picture, I want to buy a place. I don't feel like I can qualify for a loan. I've got a goal for maybe I want to find a place, within the year that I can seller finance. What would you say are the best like action steps for me to take to just really increase my chances of finding that property? You touched on it a little bit, but
Yeah.
what do I need to do to really make this happen?
Get out there and start looking at properties, and set your goals. Like maybe your goal is going to be to look at 10 properties a week, or maybe that's too much, I don't know, or maybe it's not enough. It depends on where you're at, but set your goals on how many properties you're looking at a week, how many properties you're looking at a week, and then ask the seller, ask the agent, drill in and find out what the motivation of the seller is, what season of life they're in, if they'd be open to creative financing. And remember, even if the agent says no, that does not mean that, unless the agent is the seller, that does not mean the seller is saying no. So you can still submit something in writing. And then if you have an agent that's representing you, you have to explain to that agent, hey, I'm using creative financing as a technique to do this. I'm going to have the seller finance. If you don't have an investor-friendly agent, reach out to us. We have a link below. We can connect you with one. But investor-friendly agents will understand what that means, and they will actually help you. But it will take you going through a certain number of properties and drilling into them to find that right opportunity.
Yeah, that's a great point because I think that oftentimes, and I know I've been in this situation where it's intimidating working with a realtor sometimes because you feel like they have all this information that you don't have, right? And
Right.
then, but if you're trying to do something that they don't fully understand, that can be intimidating even just to present that, right? So
Totally.
finding the right agent. And then I think just like you're saying, not being afraid to just keep reiterating over and over and asking questions and digging in. And
Yeah.
for me, I would feel better explaining up front, I'm really determined to do this. So I might have a lot of questions or, I might be really persistent. And then I wouldn't feel as bad drilling
Yes.
in as
Yeah.
much because that can be a little bit intimidating, right?
Totally. And just push through. If you don't have the right agent, then you find a different agent that's more investor friendly, or just go out and start looking at properties yourself. Do not let, and I'll end with this, do not let limiting beliefs stop you. A limiting belief says interest rates are too high. That I'm blazing right through that, and I'm flipping it around, and I'm actually seeing it as an opportunity because I have less competition. Do not let an agent tells you something like, oh, you can't do that. You can't do you can't do seller financing or whatever. You don't have a big enough down payment. Whatever they tell you, it's a limiting belief. Push through it. Flip it around. Someone tells me I don't have a big enough down payment. I'm going to flip it around. I'm going to say, well, how do I get a bigger down payment? Who has money that wants to go in with me, or whatever? Or maybe I'm going to find a seller that's happy with a smaller down payment, because that happens. So again, just not letting a belief that's going to limit you because someone said it or someone thinks it or it's their opinion when it's not actually totally true. That I would not let that hold you back. Yeah, I just want to thank Jayla for being part of this episode today. Thanks so much.
Of course, this was fun. You have so much great knowledge. I love it.
Yeah, thank you. We'll do another one soon. And thank you, everyone, for listening. We will see you on the next episode of California Real Estate Investor. See you soon. Hey, thanks for listening to the California Real Estate Investor Podcast. We'd love a review on whatever podcast platform you listen to this on. Also, visit us at thecaliforniarealestateinvestor.com or our Facebook group, The California Real Estate Investor. We look forward to connecting with you and encouraging you on your real estate investing journey.